Hi guys, we're nearing the end of the year and you may still be thinking about your tax obligations for next year and considering end of the year investments. So today I wanted to take a minute and talk about appreciation and how real estate investments appreciate compared to other investment strategies and why they might be a game changer for you when thinking about where to put your money in 2024. Let's break it down with a simple scenario. So let's say you have an extra $50,000 to invest. You're considering three options. One, investing it in the stock market. Two, putting your money into a high interest savings account. Or three, using the $50,000 as a down payment on a real estate investment. So let's just go through each one and compare the potential returns that you might get. So first up, a high interest savings account that yields 5% annually. So if you invest $50,000 into this account, you're gonna earn 5% interest over the course of the year. So let's do the math. At the end of the year, you'll have earned $2,500. So your balance would be $52,500. Now, let's look at the second option, the stock market. Historically, the S&P 500 has yielded an average return of about 10% per year. So if you put that $50,000 into a diversified portfolio or an index fund, that's what you could expect after 1 year. So after that year, you'd earn $5,000, making your total balance $55,000. And that's pretty good, right? Well, let's talk about the third option, which is using that $50,000 as a down payment on a real estate investment. This is where things start to get interesting. So let's say you use that $50,000 to put 20% down on a $250,000 property. If the property appreciates at just 5% over the year, you're not just seeing a 5% return on your down payment, you're seeing that 5% on the entire value of the property. So at the end of the year, your $250,000 property has appreciated by $12,500. That's almost 5 times the $2,500 you earned from the savings account and more than double what you made in the stock market. And you may be thinking, well, $250,000 properties are not easy to come by here in Northern California. But I'll say first that there are condos and lower entry investments here in our market. And second, I can connect you with some amazing real estate experts that are helping my clients purchase properties in Georgia, Florida, New York, and across the country. So to recap, the savings account would earn you $2,500 after 1 year at 5% interest. The stock market would yield you $5,000 with a 10% return, and real estate, even with a modest 5% appreciation, could give you $12,500 in growth because you're earning on the total value of the property, not just the down payment. And here's the kicker. Real estate doesn't just appreciate in terms of value. It can also generate passive income through rent. There's tax benefits and leverage opportunities. And these are things you don't get with stocks or savings account. Now, I'm not saying that you should ditch the stock market or high interest savings account altogether, but if you're looking for a way to leverage your investment and get much higher returns over time, real estate is a strategy worth considering. And the best part, you can get started with relatively small down payment, just like we've shown here with the $50,000. So as you're thinking about how to wrap up your investments for this year and plan for the next, I encourage you to take a close look at real estate. It's a way to really multiply your wealth, especially when you consider appreciation and the other benefits it offers over time. I hope that this gives you some food for thought as we close out the year. And if you have any questions about real estate investing or where to find these opportunities in our local market or how to get connected to real estate professionals in other states who can help find these deals for you without even having to visit the properties, then just give me a call, send me a message or comment, and don't forget to like and subscribe to follow more tips on investing. Thank you so much for watching. I'll see you in the next video.